Hello guys, good morning. In this video, I will try just to continue my special videos about Facebook, sometimes Twitter, sometimes Google. But the most important thing I told you about Facebook is 2 years ago when it was 1999. Okay, the the lowest Facebook has got is 1755. Okay, now from that time I made videos, and it's not just I predict, but it's just because Facebook always, since from the beginning, has been a challenge to Google. Now, at first you say, how? Google was 1100. Now, in 2012, Facebook is only 1755. Okay? Now the analyst, all the analysts that you can go back and you see, okay, from its inception or its IPO, from this $45 at the opening on the first day of the IPO, it goes down to 1755 into some months. Okay, and at that time, although the price is going down, for me, when I traded it, whenever I see an opportunity to trade Facebook, I will trade it. And I have done traded, and I did, and I showed you a lot of Facebook trades that I have done. I showed in my channel. Now, many times Facebook has gap apps. Now this gap apps is a jump in price because of the news. Now Facebook, during these 2 years, it has many gap apps, and these gap apps push the price up. Now just last week I told you that Facebook has a new high, and I expect that Facebook reach $100. This prediction is from or since 2 years ago. It means it's not now that they tell you this, because I see, because like the others, okay, when they see the price going down, they say, oh, don't buy, don't do that, don't do anything. And when they see the price it's going up, and the history that Facebook is gaining a price and is becoming bigger and bigger, people, they begin to change their mind. And this is what happened with analysts. Analysts, what they do, they see the price going down, they should find a reason why. Okay? And this is the big mistake. Because the price, it's not because of the company itself, but because who sells and who buys. Now, since we don't know who buys and who sells, so what's the thing that it is left for us as the public? We are the public. Public, what does it mean? It means we don't know what's going on really inside. Okay? We are not insiders. We are the public. The public, it means you just see the price, and the company gives you information about the company. Okay? Some company are losers, but they show that the company is good, although they are losers, and you see that it's the price going down and down and down until they go bankrupt. It's their job to advertise for their company. Now, the first 6 months when Facebook was going down, all the major analysts, you can go and check, most of it, they say no, don't hold it. Okay, it's a loser. It will never be Google. And for me, when I made some videos before, in that 6 months, that Facebook is a monster, it can go up and up, and it's a challenge to Google, they don't believe. Now, why they don't believe? Because they try to focus on analysts what they say. Now the analysts, they don't know the future, and no one does. Okay, no one knows. But there are something in the business itself of Facebook that makes it strong, which is a challenge to Google. Now, how do you know that? You know that from the business ad. You know that when someone wants to advertise, he should pay a company to do advertisement, okay? And Google is was the first number one in the world, okay? All the money goes to Google because most of the people know Google and they use Google, and it is powerful, okay? So other companies like Yahoo, like other companies, iWare and the other, they are very weak compared to Google. Now, Facebook, when it comes, at first, before they do a lot of advertisement like this, it was so weak. Okay, Facebook can't compete Google. But after 1 year or two, you see Google is going up and up and up and making more money and taking more percentage of the business ad. Before, Google has like 85% of the business ad. Now this percentage go down because Facebook is taking more and more power in the business ad. So Facebook is making more and more and more money. Okay, see how big is Facebook right now in the capitalization. Okay, it's so big. Now for me, I am not into prediction, okay, because I don't rely prediction in my business. Okay, what I rely on is the price itself and the market. Okay, if any company has a new high, I like that. It means this is the beginning of my operations. This is where I begin to trade that stock or that company. Okay, although I don't put like a portfolio and I choose each time. No, the only one that I see before is Facebook, and then I see Twitter. But since Twitter fails and go down and down and down, so there is no that much opportunity in Twitter. So I stop looking at Twitter until it changes its mind. Okay, if it changes its mind, it means there is a big like mutual fund or something. He begins to buy Twitter. At that time, I will be maybe doing some trades there. So for me, I am always technical, based on the price only. I don't see the company like Facebook is becoming big, or it competes Google. This is just a general idea that it is just an intuition. Okay, a trader intuition. I just see things that 2 years ago a lot of analysts don't see, and a lot of people. You can see my my videos before when I see that Facebook will reach $100. All the comments were there. They were opposite me, and they say, "How Facebook is 1755? How can it goes to 100?" They don't understand that any price can go anywhere, either up or down. Okay, this is the fact of the market. Don't say this stock will never go up or this stock never go down. This is a mistake in the market. You don't know what you are talking about, because when someone big like a mutual fund, pension plan, or insurance, or a lot of big traders, or some big trusts, anyone who is big, he has a lot of money, and most of them are mutual funds, because we know that mutual funds, they buy a lot of stocks and they drop a lot of stocks. So whenever they buy a stock, it will go up by force of the demand on the shares. Just wait a minute. So I say Facebook is the monster. I think that I always buy Facebook when it's going up. I always. Now, how do I discover that? It's just by what I use, how to search a stock using stock screener. I give this in my level 2 training. Now, whenever there is a move, I should follow this move. Okay, this move could never be in like it goes like direct straight without corrections. There should be corrections. If the correction is so big, I will be out. If the correction is little, I will stay, depending on where I put my stop loss. Now, when I see that I have like some profit, okay, that I don't want to lose that much profit, it's not, believe me, it's not $50 or $100 that I sell my stock. Okay, so stop thinking that I will enter a stock to have $50 or $100 or $200 and then I exit and I am happy with that. And they say, oh, you should take some profit wherever it is. No, this is a false idea. You just enter a trade and you are right. So why you exit so quick? The market is, when you are right, the market is giving you money. The more you stay, the more it gives you. Not always, yes, but most of the cases it will give you a reward. Now, for you, if 100 or 200 you think that it is a big profit, okay? Now, how much is your loss? Is it $10, $20, $30? It's okay. But if your loss is 200 or 300 or 500, so what are you doing here? If the profit is the same as the loss, how can you make money in the market? This is a simple question and it is a common sense. Okay? Now, I just did a video last week and Facebook was $90 something. Okay? 90. Now, it's 94 something. And it's going to 100. And this is what I like. It means this is what I want. And 100, I think, in my opinion, is just the beginning of the move. Okay? Because most of the stocks, when they reach 100 and they go up, they go faster than when they were young. Okay? Because it becomes strong. Now, when the stock becomes strong, like 100, 150, 200, you will find that big mutual fund, when they see the stock is doing so good, they go there and they buy it. That's why it's a big opportunity. Now, if you don't have money to buy big stocks, okay, you can make money in any stock, even if it is $1 or $5 or $100 or $6 or wherever. But some big stocks, when they move so fast, and you see your money growing so fast. That's why people who have money, they have an advantage. That's why I told you always that you should save money for your trading. If you are scared to trade, don't trade, find another job. Okay? Because trading is risky. Trading is a business that it is risky, so if you don't like risk, it's not I advise you, but it's my opinion, go and find a job, an hourly job, and that's it, and you stay the whole life working for someone else. Okay? But you say, I have no money. In the future you will have money. When you save, work more, and you begin to trade correctly by learning strategy or learning something that makes you money. If you don't understand the game of trading, you can't make it. You lose all your money. A lot of people, traders, at first they have a lot of money. Okay. There are some people who contact me. Someone just last week or the other week, he has $100,000, and now he told me I have 40,000. Okay? So to lose $60,000 in 1 year or two is too much money. Okay? is a lot of money. You should stop losing that much until you learn how to trade. Okay, it is as if you are giving a free things to other traders, so the other traders, they take your money because you give it for free. You don't know how to trade, you don't know how to get money from the market, but you are giving to the market. Okay, and something which is free, all the people want it. So the most important thing in trading is to learn how to trade. To learn how to trade, it's not just to find a stock, okay? And because people, they are looking, oh, just give me a good stock and I stay with it. This is not trading. You are thinking about investing, and investing, it's not trading. Investing is when you stay with a company many years, at least more than 1 year, because you know a lot about the company and you want to put your money in that company or mutual fund or wherever. So this is for the whole life, okay? But trading has a short time. You can trade for 1 week, 2 weeks, 1 month, 2 months, 6 months. It means you trade a stock in less than 1 year. This is what we call trading. It's not investing. When you reach 1 year and more, this is called investing. Okay, so the most important thing is don't lose all your money. If you are beginning to lose money, 10% of your money, 20%, 30%, you should stop. Stop and see what is your strategy. See if you really know what you are doing. Some traders, I know because they send me emails like this, they are stubborn. You explain to them that they are doing wrong, and if they continue like this, they will lose all their money. But some of them, they continue to do what they are doing. If you trade 1 year and you lose 20, 30, 40%, what do you think the next year you do? You do the same. Why? Because you do the same mistakes. Now, returning back to Google and to Facebook, I say, is Facebook or will Facebook become the next Google? Now it's the future who tell us, so we don't know. Okay, we don't know which one will become the monster, but the main thing that we are doing in trading is to see, is like swing traders, is to follow a trend. This is what we are doing. When the stock does nothing, you see sometimes stock that it is trending into a range for 6 months, 4 months, 6. This period you should never trade it because the stock is slipping. Let's say it's slipping or just walking, but it is not running. Now, when it begins to run, what does it mean? It means a lot of traders come with their money. Now, when the traders come with their money, they want to buy a stock because anyone has a reason why you buy a stock. For me, for example, I use resistance and support line to trade, and I know a lot about this. Some people, they use indicators and they use them and they are successful, but most of them are not. Some they use moving average, some they use news, sometimes they use whatever the reason is, because we don't know. If you see a stock, it's going up, you take all the traders that are inside that they bought the stock. If you ask anyone, he will have a reason. Okay, why someone buys the first day, someone the second, some in 10 days, sometimes in 2 months after, sometimes in 6 months after. Okay, because anyone has his own reason to buy the stock. Okay, and most of the people, they don't have a reason. These are the beginners. They don't know what they are doing. They buy, they sell, they lose their money, they lose. At the end of the year, they lose almost all of their money. Even if it is $2,000 or $5,000 or $10,000, which is little money, but when you lose all your money, and you don't want to learn, you don't want to educate yourself, you will have the fate of thousands of people that they lose their money, they shut their accounts, and they go whining and they're crying, and they say that the market is manipulated, the market, we have short sellers, the market is floor traders, they take our money, Illuminati, the government, an alien take our money in the market, I don't know who. So they begin to give reasons for their failure. If you fail, it is you that you fail. It's not the market. The market is always the same. It's going up, it's going down. The stocks, whenever you see each day, you open a stock screener, you see the stocks. You find some in the green, they go up. Some are red, they go down. Okay, the market is always like this. Sometimes we have what we call bulls. It means where almost all the stocks, because the people they get a lot of advertisement and they buy a lot of stocks. Okay. Sometimes we have a bear market where all the people they sell. Okay, it's just the mood of the market and of the traders. Okay, so for me, since I'm trading Facebook, I hope, it's not I hope like the hope that you know, okay? For me, I am with Facebook when it gives me money. This is the rule I always do. I don't care about if it is Facebook or it is Twitter or it is Google or Apple or any other stock that I buy. I buy a lot. Now, what is the major thing that I am thinking about is money. So stocks are just a means to make money. You buy a stock, if it goes up, you make money. If it goes down, you lose money. This is the game. So you should know how to trade these things, these stocks, in order that they make you money. Okay? It's not that you love a stock or you love a company and you stay with it until it go bankrupt. Okay? And you lose all your money. So for me, the price is always very, very important. If the stock is going up, I am in. Don't tell me that the company is bad or it is in competition, it is the worst. Okay? Sometimes you see companies that are worth nothing. Okay? Small companies, but when you buy them, they go up and up and up. You make so many money, and then you sell and you have money. So who cares about the company itself? We care about the stock, which is so different from the company. Okay? That's why the investors, they always have problems. Okay? He buys the best company in the world, but he get nothing from that best company. It's just the name. Okay? And some other people, they buy what moves. They buy what is trending, to have a trend. And for me, Facebook is doing good, okay? And it's a lot of times it has a gap ups and it's pushing. There are a lot of people buying, pushing this stock up. And for me, I predicted 100, but 100 for me is just the beginning. It's not the end. When it reaches 100 and goes up, and believe me, in the future, if things go well with Facebook and it goes to 120, 150 or 200, okay, or more, because a price, depending on who buys who, like Google, it goes to 1100, okay? Why the other stock, the biggest company in the world in America, they don't go to 1100? Why? Okay? It's just because, it's not because of this is bigger than this or doing better than this. It's just because the people, they buy what they like, and the mutual fund, they do the same. Okay? So if the stock is going up, let's buy it. If it's going down, let's sell it. Okay? This is just the game. And hope like Facebook becomes the monster. And for us as a swing trader, we follow trends. The trend that gives us the money is what we are looking for. We don't look for the company itself. When I say Facebook, it could be any company, because I bought a lot. Okay? I don't buy 100 or 200 a year. Okay, I buy a lot, more than 1,000 stocks a year, and I follow their trends. And when there is a stock that it is trending, I am in and I stay until I think I get some profit, and then I get out, I exit. If the stock doesn't move as I like or as I wish, I exit, and that's it. Okay, I don't chase stocks, or stocks going down, I buy them and they say, oh, they will go up. I would never do that. Some beginners do, and it's really a problem for them. Now, hope I have explained a little bit about Facebook and its history, and how traders are looking at Facebook and other stocks. If you have a comment, please comment. If you don't, thumb it up. If you don't subscribe, please subscribe, and thank you very much.